Thank you. Thank you for joining us. And just for your record, this is being recorded. So if you have any problems with that, let us know, or wait till the very end if you have, want to, ask questions, anything that you don't want recorded. But thanks and namaste, everyone. Thank you for joining us this evening for our what is supposedly monthly, staggered equity investment updates and webinar. For those of you who've been with us before, you all know us. We try to bring in, relevant contents and ideas and subject matter specialists, and present in a manner that resonates with you all. We try to ask questions of the experts that we bring, and also answer your questions that you might have. So for this version, investment in 2024, we're unable to do this in January. So this is our first 2024 presentation, and we wanted to touch base on some of the things that we see in this space, and the beautiful picture you see of Charlotte and what's going on in and around Charlotte. So we'll take turns. I'll introduce you to the staggered equity and a few exciting things for us that is going on, share about those. So bear with us, and then I'll hand it over to Resma, who will focus more on real estate investment in 2024. For those of you who are new, I'll just present a brief intro, highlights of what we're up to and the new deal. So founded by Resma and myself in Charlotte, our vision is, and you might notice a green highlight here, is because we're excited to kind of venture out into other asset classes in addition to real estate. And that's what we will be doing now going forward. We'll give you some examples of what we've been doing and what we've been working on. But our vision is to make real estate and other investment opportunities available and accessible, especially for communities that are at disadvantage, right? We all are, most of us are busy in our daily lives with work, family, etc. So we may not have time to look into deals, find deals. We may not know about, ventures out there. And that's where we come in. We bring those to you. We will do our diligence. We'll present it as objectively and with the detail in mind that we can, and see if that works for everyone. We are committed to generating generational wealth through investing. And in every deal, we hope to invest our own money. And that's what we've done so far. So Reshma and I, through Staggered, have partnered, JV'd with other investment firms or other partners, and raise capital, but we always kind of, invest our own money as well. So we have a network of experienced realtors, property managers, especially in the real estate world. Most of you probably know how valuable that is, to have that person or entity or business that you can trust and you can go to and, work with. And we have that. So again, green light highlight here, locate assets and companies. We used to just focus on real estate. Now we're also expanding into other asset classes, single family, multifamily. We're looking for steady income. What's upside potential? We underwrite, we do diligence. For financing, we look at debt and whatever makes sense. We will syndicate, we'll raise funds, etc. A recent addition to our portfolio, again, we have managed through our advisory. We will be on the board of companies that we invest in, but with the eye of increasing value, eventually to give the investors the maximum return on investment, and timing it such that the exit is possible at a premium. How we do it, we purchase assets or participate in ventures with value-add opportunities. That's what we were looking at. Our eye is always towards value add. And for that reason, we are not really focused on fixed income type of ventures, and more on the investment side. We collaborate with experienced teams, again, capital infusion where it's needed, provide management guidance because of our experience managing companies. Primarily to unlock opportunities to increase value. And then we look to either refi, exit, again, if there are companies that we're investing in ventures, if there are multiple rounds, we try to get in early as possible if it's promising, or wait if it's not. Um, you know, Currently, we have about $15 million asset under management. Approximately, we have 300 units under management. We have diversified our asset class and investment this year, actively working on new ideas, ventures, and real estate underwriting. Again, this is for those of you who are new. You'll see this slide here where our investments are. These are mostly real estate investments. And then for those of you who have been to our presentation new, you might see a few dots added like this one, which is our uptown kind of investment, and a few other, deals that we have worked on in the past year. This is our latest addition to your portfolio that I think some of you might have seen in my request to join the meeting here. It's a startup. The company is Nepal Tea Collective, a specialty tea venture. It's started by a very young New York-based third-generation tea grower. Their family have been growing tea for a long time, but this individual came to U.S., studied, and kind of changed the idea of tea to where it is now mostly direct-to-consumer product, and they're in a specialty, which means it's organically certified, loose leaf, and some blends, but very high-end product, as you can see with the price tag here. This is their website. They've been featured in New York Times, World Tea, Forbes, etc. They've been getting a lot of accolades in the industry. They are direct from farmer type of venture, so they're connecting farmer to consumers. And in doing so, they have stories, and a fascinating story. I would encourage you to go visit their website and look at them. They're somebody to watch closely. We invested as early safe round, and we will be getting a board seat for that. Again, this is the team. Our idea is, why do we like it? It was very innovative product. I grew up near a tea farm, very familiar with the tea space and that asset class. But these guys, pay a lot of attention to quality. And then, like they say, in investments, we look at the person you're investing in, not necessarily the product. And I really like their team. They're driven, they're very motivated, and I do see a lot of upside here. Currently the fundraise is closed due to oversubscription, and no surprise there. But there are potentially future funding rounds possible. And then if you are eager to learn about this venture, I would be happy to share with you even more details. So will Resma. And, we can stay in touch when the next funding round opens, if you're interested in investing in ventures like this. There's another prospect, and I might have mentioned this to you. It's a fintech startup. It's Washington-based. This is primarily, again, another kind of person that I came across, and we have known for some time. They're after frictionless, transparent transactions. And for those of you who have done international money transactions, you know how obscure it is and how difficult to get information is. I mean, personally, when I had some transactions internationally, I did not know for 3 weeks where my money was. It was like gone from my account, not deposited to the account. The intermediaries will just playing with the exchange rate and all that. And then the fees are, outrageous. The exchange rates are outrageous. So the technology here is patent pending, and the company is actually planning to raise funds. It's not public yet. The fundraising is not public yet, but they're doing that. And we've been in talks about helping and providing some support here early on. With that, I'm going to hand it over to Resma to go over what real estate investments in 2024 looks like, and where our head is currently in another exciting deal. Resma, to you.
Okay, sure. Thank you, Prab. So yeah, I know a few people must be surprised about our venturing out to different asset class, but we I've been underwriting these deals for a while, and for real estate market, a multifamily just did not pencil out, and hence, and we saw opportunity. We have a vision of growing staggered equity venture, so we will be investing in opportunities after we underwrite them thoroughly. So, just a side note there. For real estate, right? Those who join here for especially multifamily and who are keeping close eye on interest rate. So as we know that there was no interest rate hike this time, and we are predicting um, CoStar, Yardi Metrics, and pretty much prediction is that the interest rate will slowly go down this year, but will not be anything significant, right? So for in terms of cap rate, so what happens is when we purchase multifamily through cap rate tends to follow interest rate. So when interest rate goes up, cap rate goes up. So when we are buying multifamily, this will be the best time to buy since the cap rates are high and the gross income is pretty much the same for these multifamily. So let me explain that a little bit, right? So let's say if you were to buy a business today, a restaurant, a gas station, something of that nature, you would buy that based on your income, based on the business income. So multifamily is not different. So here, the due to higher interest rate, now we are having opportunity to buy these asset class in a higher cap rate, which means it has been discounted somewhere close to 15 to 20% today from its all-time high. So, and the other topic I really wanted to cover today was DSCR loans. So, debt service coverage ratio, as we call it, right? So, if you were to purchase any multifamily today and a bank was to give you a loan, they would look for 1.25 DSCR. What does that mean? So if you were to purchase $1 million property and your monthly payment is $10,000, then they will look for at least 12,500 of income so that you can cover the debt, right? And which is really, really difficult today because the interest rates are high. And for our single family investors here who like doing their own thing, in terms of investment, I wanted to say that be very careful and wary about the rentals, especially the Airbnbs and Verbos of the world, because there has been some law changes and ordinance changes that you might want to look at closely, right? It is coming. I know that we have audience from different places, but you will probably have to check your county specific how do you call it, like rules to find out what is applicable. And single family, like I said, will have very, very tough time meeting this DSCR because the loans they usually provide is through the whole house rental until it's not. It has been an Airbnb for a few years. So that will be a challenge to invest in single family. And moreover, if you have HOA in the communities which are restricting rentals or which might uh, restrict rentals in future, you should be really careful with those rules before your purchase. So make sure that your realtor knows about investments, make sure that you are working with somebody who is investor friendly and not just like single family home, first time home buyer broker. So moving on, Rob, if you can change that slide for me. Okay, so I know that most people here are waiting to hear about our current deal and what we are working on. So I'm very, very excited after a long time, a long wait, a lot of underwriting and analyzing. We are very close to closing a deal in Charlotte, which is 200 units. It is not, we cannot really disclose all the details yet since we have, many walkthroughs to do and inspection is still going on. But the estimate purchase price we have today is in between 22 to 25 million, and the rehab would be 6 to 7 million. This is only open for aggregated investors. So if you are not one, let me know. Or if you don't know what it is, please ask me and I can find, I can pretty much give you the details, or contact your CPA to how to get that certificate. Okay, so in this deal, we will be looking at somewhere between 18 to 23% IRR. You have to remember, when we are buying this deal today, we are buying in a higher cap rate. So once the interest rate drops and cap rate drops, like for, one or two cap rate drop will give us like 15 to 20% or more leeway there, and that is when we would plan to refinance. Or if there is growth in the community and we see upside, then we'll probably we'll keep it and refinance. If that is not the case, then we would plan to sell it within 3 to 5 years. The returns that is expected in this deal would be, you will probably make twice the equity multiple with what you invested, and minimum investment is 50,000 for this deal. But like I said, if you do you qualify or not, please let me know if you have any questions, and I can further help you with that. Okay, so let me give you a little more details about this deal. So this is where it's located. It is in Charlotte, and it's very close to Uptown. And it is a value add deal, which means that currently there is vacancy in these apartments, which we can take over and bring our specialized, property management team to reduce that vacancy. You know that there is very much shortage of housing in Charlotte, so the vacancy really does not make sense, right? So it's just about bringing a good property management team to manage this property so that we can reduce the vacancy significantly. The other thing is what is going on for this particular deal is that it is like striking in the middle of the city, so it's like walkable to a lot of restaurants, bars, and you know um, financial institutions, and a lot of things around. Okay, so I'll go to the next slide. All right, so the unit mix for this apartment is 1 bedroom, 2 bedroom, and 3 bedrooms. I would have to mention that some of them are affordable housing. As you can see in the screen, 114 units are just market rent, meaning we can rent to anybody. We can raise the rent, by market standard and whatnot. But 76 units out of these units will be affordable housing, and there is some rules around it. You can only rent it to people who make 60%, less than 60% of the median income. And there's other rules around it too about the rent and all that, but this is what we are showing, like today, as of today, what is the effective rent per square foot, and what is the difference between the affordable and market rent. So as you can see, market rent is at 1.18 per square foot, and affordable housing is at 1.07. Okay, so, and yes, it is 190 units here. So what do we do to add value to this particular multifamily? So as you can see in these pictures, we will be potentially adding a dog park because there is a vacant land that is a part of this property. The exterior would be mostly painting and power washing and landscaping. There's really not much there. We are also planning to open up a community room and a gym. Will be an addition to this property. And in terms of kitchen, like just renovating, painting, adding new appliances, and granite countertops will be our value to this deal. Okay, so in terms of income, how much is this property making today, and what we expect to make in 1 year? So the current market rent is 1.7 million and some change. So after the value add, we are expecting at least $67,000 in the first year, just by eliminating vacancy and raising rent to the market price. there are other expenses that are explained here. It's probably a little too much details for today's call, but if you have any questions, we are happy to explain on this. This is the most important number that you should remember, is that the net operating income after all the expenses will come up to $1.2 million. All right, so other asset classes. So Prab, I'll have you explain these a little more.
Sure. Thanks, Reshma. And we'll open up for a question here shortly for folks to ask any question to both Reshma and I. But just reiterating from what I mentioned earlier, real estate is still our focus, but at the same time, what we've observed is real estate deals come occasionally, and because of the interest rate situation, because of how hot Charlotte and surrounding markets that we're comfortable with is, it is very difficult to justify paying what the asking price is. And trust us in this. We've underwritten every week. We get a new deal and we underwrite it, and it does not make sense. And it just turns out to be. I mean, we're not tired. We'll continue doing that. That's what we're signed up for. So how do we kind of stay and continue to? I mean, even for us, right? Our own investments. Where do we put in? If we don't have real estate deals, what do we do? And that's when we started looking at other ventures. And what we've been trying to get a better kind of feel for is fintech, which is really, really, if you're in the technology side, this is where the next wave of, primarily by the technology itself and artificial intelligence, that's where we believe that the new wave of efficiencies is coming. And then climate finance is another where, I personally work in that sector, developing carbon projects and underwriting, carbon offset. As you know, this is a big, big, big kind of thing, just not from a financial perspective, but from just social perspective as well. And it is a real concern, and we truly believe in it. And that there is a lot of general awareness now compared to what there was 20 years ago about the impact of global warming, and everybody is kind of understands it and is trying to solve that. And we want to see and look for opportunities where we can be part of that solution, either through funding, through other technology, etc. So that's another area that we're interested in looking at. And if there's any thing that and for you, I mean, we're doing this as part of kind of community outreach as well. So if you know of anything, any developments that is worth sharing and discussing, please, let's talk, and we'll be happy to kind of feature you in our next webinar so you can share about your experience or your projects. But this is definitely where we're trying to understand more. And with that, I think we will pause and open up for any questions regarding anything that we've discussed so far. If there's anything real estate related or any hard questions, I would go to Reshma, and so I'll answer the easy ones.
Okay, so I have a question here, and somebody asked why, if the interest rate is expected to go down, why are we buying today? Why don't we just wait, right? And that's probably, I think, is the elephant in the room that everybody is like, thinking, should we buy now or should we let the interest rate go down? So here is why we're buying now. Interest rates are high and cap rates are also high, right? So we right now are buying in a higher cap rate, even though the income for the property probably wouldn't change by much, right? And we would be able to refinance it in the lower cap rate. But if we buy, so let's say somebody bought it for 3 cap or 4 cap, and if they were to sell or refinance today, they are already losing close to 20% of the value of the property, because the income probably is where they predicted. But if their exit was the same cap rate as when they enter, then that alone can change, is the whole deal. So, and the other thing is when interest rates are low and, people who are not savvy investors or, first time buyers and all that tend to crowd the market and there is just a lot of competition. That is the reason why the last multifamily deal that was 104 units in Charlotte we did was in December 2022, and we could not pencil anything else in terms of the IRR and return we expect to provide to our investors. So that is definitely one. Let me see
Yeah,
what.
maybe I'll add there, Asma. So
Mhm.
this is a great question, right? The interest rates we've been really watching. Everybody seems to be. I mean, we were ultra focused on that day when the Fed would. We thought the CPI numbers would come, much lower, and that the Fed would kind of start, winding down their interest rate hike or even stabilization, right? That didn't happen. But then what we would pay for a property or what would we buy would be on fundamentals. If it's not a money making as of today, the way it is now, then we would not buy it. And what that tells us is if we buy it and it's already profitable, it may not be the required or our intended return, but we would not be at loss, right? And then what we really see upside in, and that's the change in our strategy, is like we would not buy anything that does not make money, right? And then what we see is the interest rate will eventually go down, I hope, sooner rather than later. But when it goes down, then you have the upside, right? Because now you can justify a lower, cap rate, or even by refinancing, you get a better rate than what it is today. So that's kind of what the strategy for us has been. Hope that answers your question, John.
Yeah, so I will read this question to you, Prab, here. So based on the recent economic data being reported, interest rates are now likely to not go down as much or as quickly as initially thought. How does that change your buying strategy, if
Yeah,
at
that
all?
was the question I was answering too. I don't know if do you see the screen that I'm sharing where I have the question up on the tech meeting chat up, or do you not?
I don't see that. So I was answering the question for somebody else who sent out the question here. But yes, if you have any other question, feel free to put it in the chat. And I know that there is a question answer option too, so you can put it there or in the chat wherever you would like.
Yeah, or raise your hands.
Yes. So, like I said, we cannot give you all the details on the deal yet. But if you have any questions, like in general, we will try to answer as much as we can. Okay. So there is another question here. So how are multifamily units priced now versus last year? So in multifamily prices are down close to 20%. Some are down up to 25% from the peak of last year, mostly due to change in interest rate and affecting cap rate. It's not there are very very few market who saw rent decline, and it declined by like 1% until you're the San Francisco's or New York of the world, who has like a lot of urban population who moved out. Most of our market like Carolinas, Tennessee, the Midwest, they did not see any rent decline, but they did see the property value going down due to interest rate and cap rate. Hence, we cannot emphasize it enough that this would be the best time to buy, since the business is making almost the same amount of money it was making 1 year ago, but we are getting it for 15 to 20% less. Okay, so that was one of the question. So let's see if I have any more questions here.
Hi, this is Arun. I just have a quick question for you.
Mhm.
So you
Yes,
just
sure.
mentioned that the businesses are making the same amount of money as last year.
Mhm.
Is that because of the rent increase or significantly increased rent? or what would have caused that? Because if the interest rates are high,
Mhm.
are we saying it is because of the time when they financed it and the interest rates were low back then, or like how do you justify that?
Okay, so in that's a very good question. So how is the income same, right? So if you look at Charlotte market, depending on where you are, the rent increases were somewhere between, and this is not my data, this is the RD metrics data and CoStar data, you would see that rent increases were somewhere between 15 to 25% in last 2 years, which is like crazy, right? And with when there's a range like that, you would know that some places went up by maybe 35%. And you know, and a lot of people who, when they increase the rent, mostly is because they would do the rehab, or they will try to bring them, after the lease ends, they would bump the rent and try to bring it to the market level according to what the demand is. So the reason that the income is same is because the rent remained the same, even though the cap rate went up, which means that rent still remained the same. There was no decrease in rent, but they have to sell it for 15 to 20% less when they have to sell it for a higher cap rate. So that's how it is on sale today. Aaron, thank you for the question. Let me know if I can clarify some more for you. Then you can always set up a call with me, and I can go over that as well.
Yeah, thank you. I'll do some research on my side too, and yeah, most definitely.
Okay, perfect. Okay, is there anyone here who wants to know a little more about the Nepal tea venture or fintech venture or any other investments they want to discuss? Because we do invest in like a lot of different categories, and we are open to hearing about it. So let us know if you have, or are you starting a company, or need funds. We are here to help you as well, as far as it things penciled out and we can see that there is growth in the business. Yep. So yeah, this is not really Shark Tank, but close.
A big shark.
Right. Okay, let's see if we have any more questions here. Okay, I don't see any questions in the chat box.
I don't
So
see it either. So given this is a long weekend for many, I
yeah,
think we continue our beer game.
yeah, we do. So we have like 27, 28, some people joining. So I guess most people are interested in investing and, have the dry powder on the side that they did not get to invest, maybe because there was too many competition last year, right? So it was just very hard to buy, but this would be our opportunity. We are really excited about this close to 200 unit deal here in Charlotte, so close to home, and everybody knows Charlotte is growing. So thank you everyone for joining. And
Yeah. Yep. Yep. Thank you so much. And I have the phone number on the screen here, our website, which has had some hiccups in the past, but hopefully it's up to where you can connect with us, and the email address as well. Please reach us out. Thank you. Have a good long weekend for those who have it. See you again next month.
Thank you. Thanks. Bye.